How's it going, everyone? This is Israel, your loan officer down here in Southern California. Today is January 11, 2021. And as you can see, the lights in the studio are showing red. Why? Well, that's how the markets started this morning. That's right. Dow 30, S&P 500, NASDAQ 100, everyone showing red numbers. Now, there is a piece of information that's going to happen this Thursday, this coming Thursday, and that's going to be Federal Chairman Mr. Powell is going to basically give a report on how and what the Federal Reserve is going to do in the coming days and coming months. Now, definitely we want to pay close attention to that because the way things are going right now, it's just all over the place. Check this out. I saw this over at CNN Business. It's the Fear and Greed Index gauge. So is what emotions is driving the market now. It looks like they're 66% under the greed mode. Obviously, these past few days, everyone's been jumping on the bandwagon. You saw it with the stock market. You definitely saw it with Bitcoin breaking a record of $40,000 as of today. I think it went up just a little bit higher than that. And today it looks like it's hovering in the 38,000, so it definitely took a hit. Wanted to share this here. MBS days ahead. New week, new chance to find the next ceiling. What do they mean about the next ceiling? Basically, want to show you this graphic here. Oh, before I jump on that, these are the rates that are nationwide. The blue ones here are indicating 30-year fix, followed by the orange ones, which would be the conforming rates. Where are they hovering at? Well, let's see. The 30-year fix, it's 2.819, and the 30-year conforming, it's at 2.831. Obviously, you see the trend here. They are starting to go up. They're starting to climb up. Now, why is that? Well, it has to do with, love this piece of cartoon. He's been following the market recently, the thinker. I wanted to start off with this piece because it was hilarious when I saw it. I mean, you could just tell the emojis all over the place here. Bitcoin, as I had mentioned, went up really rapidly and then all of a sudden started to come down a bit. This is what I wanted to show you guys as far as the ceiling and the floor. So every time you see these lines here, in fact, let me highlight them for you right over here. These would be considered floor and ceilings, and it's just a way to monitor the changes that might be coming, especially in this case for the mortgage-backed securities market. Every time we break that ceiling, then we're looking into a different ballpark where the mortgage rates are going to be starting to be a little bit higher than what they are right now. So that's basically what it all means. Here down below, as always, positive news, push mortgage rates higher. Negative news, push mortgage rates lower. Well, one would say, well, what's been the positive news? Well, this has been a kind of like a ripple effect of what occurred in Georgia. Obviously, Democrats are now the majority in the Senate. And so all that good news in the eyes of the investors basically drove the mortgage-backed security to suffer. The way I put this is, imagine you're an investor and so you are putting all your money into these mortgage-backed securities. Now, mortgage-backed securities tend to have an REO, or return on investment, much slower than stocks or Bitcoins or gold. And so every time there's good news, obviously the stock market goes up, the value of gold starts going up, Bitcoin starts going up. All of a sudden these investors are like, well, I can get a much quicker return on these other markets. Let me go over there and maybe stop purchasing as many mortgage-backed security bonds as I am currently now. And so ultimately, when you start seeing this push of investors moving away from the mortgage-backed securities, you end up with a lot of them. And when you end up with a lot of them, it's the whole supply and demand. The more there is of something, their prices start suffering because they need to sell these bonds. And so the only thing they can do is bring the price of those bonds down. Well, by doing this, it brings the mortgage rates higher, and vice versa. Whenever you see these markets start going or suffering, as you're starting to see, well, the opposite is going to occur. Now, obviously, this is a ripple effect. It takes a couple of days, but from what we're seeing now, it looks like investors are just jumping back and forth really, really quick. And so that's what we are seeing now. And with that, let's go take a look at what the mortgages are as of today. We're going to start with a conventional loan. This is going to be for a 30-year fix, 20% down payment on a purchase of a home. Please excuse the date here. It should have read differently. So these are the rates as of Friday. versus today. You can pause the video. Depending on what your FICO score is, you can just crisscross and see what that rate is that we are offering as of today. When I say FICO score or credit, I know I just loosely say it. I just want to put a pause here. And so whenever you run your credit report, there's going to be 3 credit bureaus. And so the banks, what they do is they don't pick the highest number nor the lowest. They stay with the middle score. And so that middle score is the one that's reflecting here on the screen. Now, I've had a lot of clients that come to me and say, well, I just had my credit run by, the dealership down the street last week. I tell them, well, they use a different system than banks do. So just keep that in mind. So if you did have your credit run by a car dealership or any other entity that's not a bank, chances are that FICO score or that credit score is going to be really, really off. There is a free service, Credit Karma, just so you can get an idea. I'm not gonna say it's a 100% right there on the mark with the reports that a bank would run, but it does give you a pretty good sense of where you might be standing as far as your 3 credit scores. Okay, with that, you can also take a look at the competition down below. Keep in mind that these banks are working under a 745 FICO score only. If you visit their sites, these are the rates that they offer. Again, you would need a 740 plus FICO score to be able to take advantage of these rates that they're offering. Let's move on to the second program, and that's going to be the FHA. This is a 30-year fix with a 3.5 down payment. Pause the video. Here, I really kind of want to show off our colors. Why? Because if you could see these rates with the competition, they are really, really high. In fact, the lowest one is Quicken Loans at 2.625. If you take a look at our 740 FICO score here, we are offering you a 2.375. This was as of today versus yesterday. There wasn't any change. But look at this. Even if you have a 700 FICO score or a 660 FICO score, we can still offer you a 2.5 interest rate versus what you see down here, where you would be required to have a much higher FICO score. And with that, I'd like to finalize this video. If you're thinking about refinancing, purchasing, definitely give us a call, 661-388-7667. Or if you're a homeowner wanting to know what the value of your home is, give me a call. We have a great team that would be definitely helpful in getting that information your way at 661-388-7667. May God bless our nation. May God bless you. And I'll see you guys on the next video. Take care. Bye-bye.